Well, we're back with our guest editor, Swarup Mohanty. He's been part of the ET programming from the word go pretty much. We did get a slice of his opinion on the markets, what his thinking about India and, of course, the mutual fund industry is. But before we bring on board our next expert, I'm going to take it back to Swarup and find out what sectors are looking interesting in this current market. And Swarup, like we were chatting about earlier today, it has to start with banks.
Correct.
That has to be part of your core portfolio, right?
Yeah.
But banks are also getting so diversified now. You know, the large are getting larger, newer ones getting created, yet there is so much consolidation in the industry as well. Who's going to win the race for an investor?
Yeah, I think when you look at India, and one of the reasons we are discussing banks is, when you look at the country, there is before COVID and after COVID. And what started during COVID will probably define the journey of India going forward. Because make no mistake, India is moving from a fixed asset investing regime to a financial asset investing regime. And we saw the birth of it during COVID. Probably started during Demon, but got cemented in COVID. And that's why the core of everything now becomes the banking and the financial system, because money flows through that. And the stronger it becomes, better for the average investor. I mean, money should be able to come in seamlessly and go back seamlessly. And because of the digitization and the advent of tech, the way that whole segment was 10 years ago stands completely different going forward. You have large banks looking like tech plays now, right? And so hence the reason for this whole thing on banks. But the other part that you are asking for is true for any industry. I mean, the large will get larger. It's up to the smaller player to come to the table with their own strategy. I mean, there's this saying that, we are a small and mid-level fund house. And when you look at some of the large fund house, the first thing not to do is play their playbook. If you go if you go to the big guys with their playbook or try to ape them, then they'll come at you with such large resources that you'll be buried overnight. It'll be fascinating to see how the other players shape up, and not to make interim judgment of some people who are going through a bad patch maybe in the long run. They will regroup, they will come back with their own strategies and come back with their own place. And then it's not just about size. Some niche players can be very strong in their own areas also, can expertise themselves in the other areas. And the banking business is also changing. What used to be just a savings account business lending long is now becoming a third-party product market also, right? And because people have a lot of faith on a bank, people will continue to build that trust thing on a broader sort of platform. It's how banks adapt and how banks take this whole financialization of assets to the average investor.
And the tech revolution
and
that
the
comes
tech
with
revolution.
it. Yeah.
See, India today is a fully biometrical identified country in the world. Everybody who's gone for another has taken the tech route already. We are completely penetrated. So how do the banks reach that last mile will define the difference between a great bank and a good bank.
Yeah, absolutely. In fact, on that cue, let's welcome on board our next speaker. We've got none other than Mr. Dinesh Khara, ex-chairman SBI, joining in right now. Mr. Khara, so good to have you today, on the show with us. And we've got Swarup Mohanty from Mirae Investment Asset Managers as well along. And he was just highlighting as to how it's fascinating how Indian banking system has evolved over the years. But don your ex-banker's hat, Mr. Khara, how do you think the shape of Indian banking is going to be 5 years from now?
Well, it's a very interesting question which you're asking me, particularly in the context, the way the ecosystem is rapidly changing. So actually that is, there are two ways. One, of course, to look at the kind of challenges which it is throwing up. And second is, more important is how best the ecosystem can be swept to the benefit of the players who are there in this whole ecosystem. So I think in that context, I would like to mention that what Mr. Mohanty was mentioning, that eventually what is going to matter is that how fast and how relevant the banking system will be for the last mile also in this economy. So, what we are talking about is it's not merely the growth in terms of the absolute number in terms of GDP, but also the per capita improvement also. Per capita income improvement as well. So I think that becomes a very relevant context. And what was also mentioned by Mr. Mohanty, I tend to echo that sentiment, that herein lies for the banks, if at all they have to really tap the liabilities, they have to come out with the solutions which are actually being sought by the customers. So the customer centricity will hold the key for the banks, irrespective of their size, big or small. And it is not merely in terms of product, but it will also be in terms of the distribution channels which the customers would like to use. Maybe it is physical, maybe it is digital. So I think that is going to be the defining area going forward. And of course, with the help of analytics, it is going to be a different game altogether, because when it comes to the hyper personalization, that is something which is possible now, because banks have got huge amount of data relating to their customers. They can very well profile their customers, and after profiling the customers, they can reach out the customers, which will actually increase the customer centricity, and customer experience will go up significantly. I think going forward, to my mind, in the next 5 years, this is how the trajectory will be defined. And apart from that, on the asset side also, of course, what we have seen of late, that as far as corporates are concerned, they are actually depending upon the liquidity which is there in their own balance sheet, or they are depending upon the alternate sources of capital, be it the equity capital or debt capital, for financing their long-term investments. But at the same time, banks have got a very relevant space when it comes to supporting the ecosystem of the corporates, be it employees, be it the supply chain. So that is something which will hold the key for the banks to really scale up their asset size also. So this is broadly, I would say that this is how it is going to evolve. And of course, leveraging technology, cutting on the costs is going to be another focus area for the banks, because, of late, what has happened is that the margins are squeezing.
Yeah.
But when it comes to raising capital and cost of capital, it is very essential that you have to cut your operating costs somewhere. So therein, perhaps one can sweat the AI and the newer technologies so that they can cut on their costs also. Right. I'll stop myself here, maybe answer your further questions.
Yes, absolutely. You've given us so much food for thought, both for, investors, for a banker. But let me bring on board Swarup, the investor. Swarup, would you have any questions for Mr. Khara?
Yes. Mr. Khara, good morning. Such an honor to be sharing a skin with you together and having you begin my day as a debut as an editor. But what fascinated me about your tenure at the bank was you saw this change, this structural change of penetration, or the beginning of penetration of moving towards financial investing, as well as penetration of the bank. How would you view the difference in the two landscapes before COVID and after COVID? And do you think right now, when you look at the banking system, we are now equipped or we still have a lot of work to do to get to the last mile? By the last mile, I include the change in demography also.
What you mentioned in terms of, we actually define as far as the banking landscape is concerned in the pre-COVID and post-COVID. That's a very relevant context, because what happens is that during COVID, the adoption of the digital went up significantly. And also the other very relevant aspect is that during COVID, people had a lot of liquidity which was left out with them. And that showed up in the subsequent years in terms of increasing spending, and also the GDP, the way it went up. So I think that was a defining moment, if I may say so. And of course, at the same time, adoption of digital went up significantly. And by virtue of that, of course, when it comes to payment system, etc., it really got evolved. And also from the regulatory perspective also, there was enough guidance on the payment system as well. So I think that is what is the real defining moment. And when it comes to the growth of retail, which we have seen in the economy, even that was also seen soon after the COVID. So I think I would say that soon after COVID, maybe a couple of years were simply an aberration. we should not really get bogged down by the fact that, when it comes to the credit growth, etc., there are challenges. The way I look at it is that we have to actually see that the banking system credit growth should be at least 2% more than that of the GDP growth in terms of nominal terms. So nominal terms, GDP growth is around 9.8 or around 10%. So that being said, now actually 12% of the credit growth is a decent growth. But very important aspect is that in the ecosystem, in the intervening, there is a lot of responsible borrowing which has started happening. And thanks to the credit bureaus, this is something which has happened. Thanks to the IBC which has come into play, people have understood that, if at all they have to grow, they have to move up in their life, they cannot afford to cheat the banking system. They have to actually follow the discipline which is required there. So I think this is something which is a very important change which you have seen. And this is something which is going to define how the banks will really move up and how the economy will also really conduct itself with the financial sector. Now, when it comes to financialization of the saving, part of it is attributed to the same, because when they were looking at, when the customers were actually looking at in terms of that, how can they improve the yield on their savings, they started trying out with the various products from the financial sector, and they have come to the maturity level where, thanks to the SIP movement which was introduced by MFI, saying that mutual fund sahi hai. So mutual fund sahi hai concept has really got deep into the system. Today, mutual fund AUM stands at about 72 trillion Indian rupees. When it comes to banking system deposit, it is at around 250 trillion Indian rupees. So I think going forward, my sense is that in this particular space, when it comes to investing, I think there is going to be a significant improvement, because now we have seen that when it comes to the AIF market is also evolving. So which is actually leading to investment into the unlisted space. So now that is one area which has started growing, because mutual fund had always had a limitation in terms of only identifying from the listed space. Listed space has got the limitation by itself. About 400 trillion would be the market capitalization of the economy. So about 72 trillion comes from the mutual fund. And also when it comes to direct investing, also even that would be contributing. And I think this is the way forward when we look at the pension fund industry. Even that is also now actually evolving significantly. So I would say that these are the early days, and I would say that this is the foundation for any developed economy, because when the market starts moving fast, when the banking system play simultaneously offering the fixed coupon returns, so for different segment of customers, there are various options which are available. So that is something which is going to really go forward in terms of supporting this economy in the days to come.
Right. Mr. Khara, both Swarup and I have a question for you, and we'll take that together. But what I wanted to understand is that with size and growth also come challenges. In the very near term, and you rightfully talked about one of the aspects that it's a fight for margins. It's getting tough out there. There is fierce competition. How do banks handle challenges, and what are the challenges really to begin with to try and garner more market share? And Swarup, your question.
I think the subsequent question, you can add it to that. I mean, when I grew up, there was practically State Bank of India. And then the private banks came in, and now we're talking about the advent of the digital world. How does a large player, it's always fascinated me to understand as a student of learning business, how does a large player like SBI, with its brick and mortar, depth in the country, adapt to all these changes and onslaughts of various challenges in the industry, which, I'm asking Mr. Khara because he saw all these challenges during this incredible tenure, and SBI is where it is. The other part is, sir, you also saw the change in the mutual fund side also, where practically, there used to be a fight for number 1 and number 2 position in the industry. Now the fight is restricted to the number 2 position. SBI just broke away, right? How does, it's fascinated me because you came out of nowhere to build this, and it was, to be very honest with you, sir, a little unexpected from that larger house to adapt so quickly. How was that done would be would be a learning for me also.
Sure. Well, I think I would split both the sides questions into two. One is, of course, the kind of risk which are there, and the second, of course, is how can the larger organizations adapt to the changes which are there. Well, of course, what I would say is that when it comes to risk, I think every day actually unfolds into something new. One, of course, banks have to face, credit risk used to be a significant risk. And that, of course, I would say to a greater extent, there is an adequate appreciation in terms of the credit risk. And for that, of course, there is enough, investment in terms of identifying the macro level risk and also now further distilling into the micro level risk also. So I think on that basis, the structure has been all, tailored to address the risk in good time. And at the same time, the control and follow-up piece on the credit risk also has been strengthened significantly of late. So, but at the same time, we continue to experience the operational risk on an ongoing basis, particularly for the larger entities. That's a major risk. And from that point of view, unless and until there is a strong control mechanism, and for that, leveraging technology becomes very, very important. So if at all that can be put in place, so I think even the operational risk also gets addressed to a larger extent. Of late, the compliance risk is another area which is really evolving into a very significant risk. And particularly when we look around the various kind of players in the global economy. So, and particularly, when the banks are becoming large, they have to deal with the risk which are emanating from such geographies also. So I think on that particular piece also, there is a need to be a little vigilant. There is a need to really sense the environment and identify the risk, and at the same time putting in place the mitigants which can help in terms of addressing this. Of course, the last but not the least is the cyber risk, which is really assuming greater significance, which actually is at times even go to the extent of shaking the confidence of some of the customers also. And on that, a lot of efforts are being put in, both from the organizational endpoint also, and also from the point of view of educating the customers as well in terms of what all precautions they must take. So I think the environment is always changing. Risk environment is particularly changing. One has to have very effective sensors in place so that one can identify the risk in good time and mitigate. It is not merely reactive. It has to be proactive also in terms of how risks are really evolving and what shape it will take. The bank should have the capability to really plan it out also. The second question is how the larger entities adapt itself to the changing environment. I would say that it actually emanates from what I mentioned from the risk point of view. One should be in a position to identify the trends in good time and also start tweaking the structures in good time. I would also like to mention that very often there is a need for process redesign. There is a need for even the product redesign also, because when it comes to the ecosystem, around the time when we started banking, we used to have a simple system of introduction when it comes to opening of account. Today, somebody who used to have an account used to introduce and the accounts used to get opened. But today, there are enough credible information available in the ecosystem. How can we extract that information before opening the account and ensuring the KYC, etc., etc. So I think over the period of time, we have seen how the how the changing environment can bring in the lifestyle change with the customers, and also because even these are the public facing entities, so customer-facing entities, how they also need to change. So very essential is one has to keep very close tab on what's happening around, and accordingly, should identify the opportunities and how can we really deal with that. The second question which you asked, Mr. Mohanty, relating to mutual fund, yes, of course, at a point of time, which was 2013 to 2016, was actually quite an exciting moment for me also, and I was given a chance to lead SBI Mutual Fund. And let me share, when I went there, it was just about 60,000 crore worth of AUM, and it was static for 10 years. And this industry AUM used to be about 12 lakh crore, 12 trillion around the time when I left. So in 3 years' time, I had an opportunity of more than doubling the AUM. But yes, of course, it was not an easy game. Of course, as I mentioned, that my focus has always been on the customer and how best we can serve the customer. On the mutual fund side, there were two aspects. One, to ensure that we should be in a position to generate decent returns, which also means that our selection process should be very robust. So gave a lot of emphasis to the research, in-house research, and which eventually helped in terms of generating better returns over the period of time, reviewing the returns in 3 months, 6 months, 1 year, etc., etc. So that is something which helped. And then, based on the returns, when we could reach out to the customers, they also started believing. On the top of it, the parent also had some confidence and they started distributing the product. Eventually, we had gone for the blue ocean strategy. We went to the places where nobody had thought of, nobody had heard of mutual fund. So this is something, these are the foundation stones which were laid, and eventually it paid off over a period of time when it became the leading mutual fund of the country.
Right. Swarup, does that give you the trick of the trade on how to become the biggest mutual fund?
No, one always learns every day. But then, Mr. Khara, the big question, which is, let's bring the elephant out of the room, is that there's this huge debate always of PSU banks versus private banks. And, you have this large size of PSUs in the country, but probably the fleet-footedness of the private side and now the digital aspect. How do you see the space of PSU versus private, or this whole thing of brick and mortar versus digital going forward?
No, I think the way I look at it is, my belief is that it is agnostic to the ownership. If at all entity is geared up for change, if the entity is in a position to appreciate what the customers need, so irrespective of the ownership, they will do well. And irrespective of the size also, they will do well. So I think on that particular count, as far as nimble-footedness is concerned, I think as far as public sector banks are concerned, they can also have adequate nimble-footedness to deal with the competition. I think it's more in the mind that, they cannot be nimble-footed. But my sense is that they can be equally nimble-footed also. Having said that, I must also mention that one has to identify the customers well, and one has to ensure that they lend properly. And that is something that is one of the reasons that in the previous quarter, we have seen that there were some challenges in the private sector banks in terms of asset quality, whereas public sector banks did much better. So I think it is, one has to really address the issue on the fundamentals, irrespective of the ownership. There is no challenge in terms of capital for the public sector banks. There is only the, what I mentioned, that if at all they can spot the opportunities in good time, I think that is something, and also ensure that the organization keeps on maneuvering the challenges effectively. That is something which will help the entity irrespective of their ownership.
Right. Okay, Mr. Khara, always so insightful chatting with you. Thank you so much for making the time out. And Swarup, any last words for Mr. Khara?
Mr. Khara, especially as a mutual fund industry person, has been that inspiration, because I don't know whether SBI is a bigger story or SBI mutual fund is a bigger story. Which part he will, which part he will pick is very difficult, because he's seen the uptake on both sides. But an absolute honor, Mr. Khara, to always know you and the way you build the story is a learning from me. Thank you so much.
Thank you
Thank
so
you very
much.
much. Thanks a lot.
Thank you so much, Mr. Khara. On that note, we're going to take a very quick break. But when we come back, how can we deviate from markets? We've got the mutual fund man. We're going to have Nilesh Shah from Envision Capital joining in after the break. And let's see what sectors are they betting to make money on.
वेलकम दादा।
वाह
अरे भाई ब्रेकफास्ट